Hello and welcome to our first webinar that's a part of this year's Ag Smart Money Week, brought to you by the University of Nebraska-Lincoln Center for Agricultural Profitability and Nebraska Extension, with support from the North Central Farm and Ranch Stress Assistance Center. I'm Jessica Grosskopf, Extension Educator and Agricultural Economist with the Center for Agricultural Profitability. Through daily webinars this week, Ag Smart Money Week aims to equip farmers and ranchers with the latest tools and information, along with strategies to improve their financial and risk management to build success in their business. You can find a full schedule and register for our upcoming webinars on the Center for Ag Profitability's website at cap.unl.edu/smartmoney. This webinar on budgeting family living into cost of production is designed to help farm families understand how to calculate and incorporate their family living expenses into the cost of production while managing income decline. You'll walk away with ideas for actionable steps to create realistic and sustainable budgets that balances both farm operations and family needs. Presenting today is Anastasia Meyer, an agricultural economist with the Center for Ag Profitability, and Glennis McClure, a farm and ranch management analyst here with the center. I invite you all to include any questions that you may have during the presentation into the chat or the Q&A. Anastasia, I'll turn it over to you.
Well, thank you, Jessica. So today, Glennis and I want to talk to you about budgeting family living into cost reduction for a farm or ranch family. So why should we incorporate our family living expenses into a cost of production? Well, it's really to ask that fundamental question of, can the farm or ranch not only sustain itself, but also support the family living on top of it? By knowing this and knowing if it is able to support both the farm and the family, you can make better financial decisions. You can work towards long-term sustainability, work towards maybe you have some large goals, purchasing land or some different goals. You are better able to reach those goals by incorporating the family living expenses into a cost of production. So family living expenses also have a lot of challenges on farms and ranch. First off, the farm and ranch income, it's not regular. Oftentimes it happens once or a few times throughout the year. It's uncertain. What are crop or cattle prices doing at that time of year? It's irregular. Are you making a profit that year, or is it a low income year? So those are all challenges that farms and ranch face. There's also a lot of competition between the farm and ranch and the home expenses. How do you use your cash? It's hard to sometimes cut family living expenses because the farm expenses are so much greater. And it's hard to think about cutting that family living expenses when also the farm expenses have to be cut as well if adjustments need to be made. Like I said earlier, those household expenses are relatively small compared to the farmer ranch, and there's a lot of overlap. A lot of times your family living expenses are tax deductible, at least part of it, because it is also part of your business. So there's a lot of intermingling between a family living expense and a farmer ranch expense, and then just the challenges of the frequency of getting that farmer ranch income. All really hard challenges to address when you are incorporating them into the cost of production. So first, I want to talk about the Nebraska net farm income. This is actually a screenshot of a webinar that was just done last week by Brad Lubin. The information is at the bottom of the screen. But in 2023, we had actually a record year for our farm income. We had $9.2 billion in Nebraska net farm income. We had a sharp decline in 2024. Right now, we are predicting a drop down to $7.69 billion. A lot of that came from the crop receipts, corn, soybeans. Those receipts are down. Livestock's up, but depending on what type of farm or ranch you are is going to be depending on how bad you're feeling this decline. Now, I will say that Nebraska overall is still a strong ag economy. The $7.69 billion is still a strong ag economy. But however, it is a very sharp decline in net farm income. So 2025, it's expected to be about the same. Not a whole lot of change here. Livestock receipts are still up, crops are down a little bit, but we are predicting to have a very similar year next year as we are this year. So it leads me to the question of, do you know how much you're spending a year on your family living expenses? This is a hard number really to calculate, and I think a lot of times you don't really know how much you're spending unless you're sitting down and calculating everything out. If you are one of those farm families or ranch families that have this down to a T, great. I think you're probably one of the few. But I think it's really important that we sit down and really think about how much we are spending in family living expenses so that we can incorporate it into the cost of production budgets. There was a study done by Kansas Farm Management Association that said that farm families are basing their family living decisions from the last 4 years of the net farm income. So it's great when times are, poor and then we're getting better and more farm income. But now in times of decline, we really need to be thinking about what adjustments need to be made, not just in family living, but probably in the business aspect as well. So how to assess your family living expenses? Well, let's start to think about what our family household expenses are. We have our housing, we have groceries, utilities, healthcare, education, and other miscellaneous expenses. I think it's important to think about what are your fixed expenses, what are the same every single month, regardless of the month, and what are your variable expenses. Chances are those variable expenses, maybe it's vacations, traveling, maybe it is, going out to eat, that type of stuff. Those variable expenses are going to be a lot more available to be adjusted than those fixed expenses. So let's say you want to start looking at your family living expenses. How do you go about doing it? Well, I like to say, let's pick out 2 months out of the year. Don't pick out the months that you're having your air conditioner on full blast or your heater at full capacity. So maybe we go March and October. You want to kind of pick average months. Then you start keeping a track of those 2 months, and then you can double those for an estimated yearly amount. Make sure you include everything from medical care, health insurance, household repairs. What happens if your furnace goes out? How are you budgeting for that? Are you budgeting for gifts? A lot of times we forget about birthdays and Christmas and baby showers and online shopping, how much your pets cost, all of that stuff, as well as any life insurance, real estate taxes that are just on your home. All of these things are good to be thinking about how much you spend and how much you need to adjust that for a yearly family living expense. There's many worksheets out there that you can start thinking about this, and a lot of times it's, well, I didn't think about that. But they're all good places to start. If you don't want to take 2 months and you want to take a couple, maybe 4 or 6 months, that's fine. But just having a realistic expectation of your family living expenses. And then you're probably going to be needing to add some in your miscellaneous as well. We always forget something. But when you come up with your family living expenses, are you in the ballpark? Well, there are these numbers that we can compare them to. So the Nebraska's Farm Business Association, they said the average family size is 3.2 people, and the total family living expenses was $116,000 in Nebraska. So $116,000. Is your number close to that? It may or may not be. It might be higher, it might be lower, depending on what your quality of living standards are. But I also want to compare it to a larger number. That $116,000, that was out of 27 farms. So if I looked at FinBin, which is a database that Nebraska Farm Association uses, we looked at all 519 farms that use FinBin, and they said that an average size farm or family is 2.9 people, and the total farm living expenses are 80,000. So quite a bit difference between the 116,000 and 80,000. So I wanted to compare one more set of numbers, and it comes from Kansas. They don't use FinBin, but they were saying here that the average family living expenses are about that $90,000. So I think it is important to recognize how much it costs to live, and be realistic with that number. Is $40,000 a realistic number to live off of? Well, for a couple, it said $84,000 was the average cost for a farm family. So be realistic when you think about this. These are some numbers that it breaks it down into ages and some different utilities, but these are resources out there that you can use and compare to. So, how to incorporate it into the overall cost of production? Well, let's use the enterprise budgeting. So you can add the monthly or annual family living expense to the cost of production for each farm enterprise. By doing this, you're allocating a portion of that living expense across all the different farm operations. So if you are a crop operation, it's going to look than if you are a crop and beef operation or just a beef operation. But it's look at it, if you're half and half, maybe you split up your family living half and you budget that out into crop. Maybe you split half and budget it out into your cattle side. But we need to adjust everything. So adjusting by a per unit production cost, by the cost per bushel or cost per head of livestock, it allows you to make some more informed decisions with the family living expenses budgeted in. So how to do this? So let's say that there is a spouse and they have the farm insurance, the health insurance, they work off the farm. And so the farm side only needs to pick up $40,000 per year. And I specifically used $40,000 here in this family living example, because I don't think it's realistic to have a $40,000 family living expense per year. If that's you, great. But I think majority of the farm families in Nebraska, probably have a much higher. But let's say this farm has a spouse that that works off the farm. They need $40,000 from the farm for the family living expenses. Let's say they raise 100,000 bushels of corn. That would mean that they need an extra 40 cents per bushel added to that cost of production in order to have a positive farm income. This adjusted cost of production figure offers a target for that marketing. By knowing what your costs are, you can have a good idea of when to market your grain, when to market your cattle, and feel good that, hey, you might not be making the most money. Maybe the markets go up tomorrow, but your bottom line is covered, that you are still making money and that you are still in the black and not going into the red.
Okay, so I think I'll pick it up from here. So yeah, so I definitely think Anastasia is onto something here, and as we look ahead for our 2025 budgets, whether it's crops or livestock, we can put in a figure that will help us again do some targets on prices, let's say, depending on what we need for family living. So I get the opportunity every year to work on those crop budgets and livestock budgets. Particularly, I just sent off for publishing, and hopefully those will be out really soon, the 2025 crop budgets. So we've been working on those now for several weeks. And just a few notes, I'm just going to explain kind of how you can add those figures in. Of course, you can just, she showed some good examples there of, just using Excel template, whatever it might be, to take a look at all of your expenses. And then you can do that, of course, on your enterprise budgets as well. But we've got a couple tools at the Center for Ag Profitability that, can help you do some work with this as well. But anyway, so when you look at our crop budgets or cost of production budgets, we usually show a figure that is a cash basis. So basically a figure that is your cost of production that covers just cash costs. All right. And then we also, though, have what we call an economic or a total cost of production figure. And that does include, again, covering all cash costs as you project ahead for the year, plus unpaid labor, depreciation, opportunity cost of investment. So, there's a couple economic principles here that I always try to share and remind people. So in the long run, as you're looking at your budgets for the coming year, we want our revenue, the income that comes in for each of those enterprises to cover all economic costs. So the long run meaning, 3 years, 5 years, there's no magical number really. But, over time, we want to be able to cover our labor, pay ourselves basically, and also, of course, pay our hired labor. We have to do that anyway. That's a cash cost. But depreciation. So the whole idea of being able to reinvest in your operation is really important. So covering depreciation so that you can replenish those, that equipment, those items over time. And also opportunity costs. So if I'm investing $1 million in my machinery and I've got all this investment, perhaps in my land, I would like to have a return on that. So again, in the long run, I want to have revenue that can cover all of my economic costs. So in the short run, though, it might be that we just cover our cash costs. And so in times of low commodity prices or low yields, sometimes that's all we can do. But we can put that figure in for family living because, again, we know we have to live. And as Anastasia mentioned, we can do some things to lower our family living costs sometimes. And one might be, the whole eating out thing, right? We know that costs a lot these days. Even just buying new, clothing and some of those things are some of those variable costs that we might, do without the trips, the vacations, those kinds of things, of course. So anyway, what I'm saying here too is that labor can be, of course, paid labor, like our hired labor, but we can also look at our labor. A lot of times it's called unpaid, but our labor in our enterprise budgets can be set to cover what is needed for family living by using paid or unpaid labor. So we've got this great tool, and I hope that you've heard about it, but it's the Ag Budget Calculator, the ABC Enterprise Budgeting Tool. And that website is agbudget.unl.edu. So actually over the weekend, we work on all of our crop budgets. I've been working on those the last several weeks. And I spent time going through the Ag Budget Calculator program and putting all of our 2025 crop budgets in there so that they are there for you to download and to use for your budgeting. So you can download and you can go in and just make modifications to all of our university or Nebraska budgets and then do and work with it here. And we can include some things, change some things with our labor figures to make them cover what you need to have covered. So go ahead, next slide. I also like to explain, and I talk about this quite a bit, that we really need to be profitable, especially if we are going to pay ourselves. And again, this is, again, looking at those more simple, business arrangements, sole proprietorship, that type of thing. Because if you're in a corporation, it could be that you're drawing a wage anyway. So that could be paid labor when you're doing your budget. So it just depends on your situation and how you have things set up for your operation. But we really need a positive net income, because I really want to remind you, in the economic sense of things, to reinvest in our business or operation. That's one of the things that we do with our profits. And that can mean paying down principal, because again, principal is not something we deduct. So as we're paying principal, we're investing into our business and operation, or we're buying new and replacing old. Okay, so if we've got cash, from profits, we can buy new and replace something old, and not have to borrow, again, depending on what we have for cash available. Obviously, we got to take care of Uncle Sam. We got to take care of income taxes, our state and federal taxes. So again, those aren't deductible items, but that is what comes from profits. So we've always got to take care of that. And then the other is to make a living, our family living. So I always like to remind people that you got to be making some money to be able to live off of your farm or ranch. Okay, next slide. So, and then here's an example too. I guess I love numbers. All right. So I think it's really important to do those analysis at the end of the year. And I want to be able to grow my operation. I want my net worth to change in a positive way. And so I just threw this slide in here to, again, remind us of a couple things, in that, we want to always take and do kind of a cost basis balance sheet, beginning of year, end of year, and also take a look at how our inventories are changing. And again, some of those valuations. But I'd like to see growth in my net worth. And what goes into that? Again, we need to have, if we are growing our net worth, we should have a positive net farm income. And again, here, net farm income is really the same as profits. So just in this example, we have a $60,746 net profit. And in this case, it's a little different example than what Anastasia shared, but let's say they have 32,000 of personal income. So that's a positive. And in this case, we're planning to take 46,000 from the farm receipts and so on for family living. So we deduct that. We've got some income taxes to pay. There might be some other adjustments in personal or accounts payable as shown here. So what we're trying to do is we're trying to look at what that retained earnings is, as well as maybe some change in market value of capital assets. So our change in net worth in this example was a positive 45,239. So our ending net worth has grown. So I did recently write an article. We have our CAP publication series, and I wrote an article about how net farm income impacts net worth growth. So you can see, though, the reason I'm talking about this, the reason I thought of this is an example where it shows you that family living coming out of the farm receipts, as well as income taxes and so on, plays a part in, how our net worth changes from beginning to end of year. So I thought, as we're talking about ag smart money, we need to understand these concepts again, because in order for me, or in order for our operation to grow and to succeed, I got to take a look at these numbers and understand them. So go ahead, Anastasia. All right. So I'm going to show you just a couple things here now, coming off of what we do with our ag budget calculator. So I just quickly went in and I have those 2025 budgets entered into our ag budget calculator. And anytime you see where it says budget year 2025 UNL, that means that I'm working off of a budget that I would have entered for the state. And again, you can take those budgets and modify those and make those your own. All right. You can name them how you want to and so on. We number our budgets. This year we have 83 different crop budgets. We actually added a popcorn budget, but we had to delete a couple budgets in the soybean category because of the dicamba issues. So we always watch for those inputs and things and how those change. So this year we have 83 different budgets. I picked a 33 corn budget and a 66 soybean budget just to share with you kind of how this would work if we were going to add in our family living figure into these budgets. All right. So go ahead, Anastasia. So this is that 33 corn budget. What I did is I just took the report, what the printed report would look like. Actually, we can expand details. So whenever you see those neat little triangles there, we can expand the details and look at behind that. But in this report, I kind of condensed it And I wanted to show you that in going back to Anastasia's example of figuring $40 per acre. Anastasia, you want to show that over there? Cost per acre, yep, under the labor. So $40. So we would then plan to take, and I've got 500 acres here of irrigated corn, 275 bushel yield, all right? And so I'm figuring 20,000 from this budget, or, you know, as a part of cost in this budget. And you can see then our total economic cost is 344 per bushel as I project for 2025 in this example. Now, you can also toggle between the economic and the cash. Like I said, you can just look at what a cash budget would look like. I added, I said, well, what if we sell that crop for 360? And we would have a net return of 23 cents a bushel in this example on the corn side of things. Okay, so let's go next to the soybean budget. So again, this is 500 acres of soybeans. So I have 500 acres of corn, 500 acres of soybeans. I'm figuring a 78 bushel yield on irrigated soybeans. So you can see here as well, I put in the $40. So I got $20,000 that I'm budgeting to the corn and $20,000 that's being budgeted to the soybeans. And then here, then I've got a total economic cost showing in $9.72 a bushel. And in this case, I showed what if we had a price of $9.50, and we would actually be losing a little bit on the soybean crop then if we had those figures in there. Okay. So, and then go back to that. Yeah, there we go. So here then, what I did is I just wanted to show you that I've got two enterprises, as noted earlier, two crop enterprises in this case, and I've got a total of $40,000 labor included. So I can actually pull those together in our ag budget calculator program. And I really love that feature because I can go in and budget each of my enterprises and then pull those together in what we call a whole farm report. And then we can see, actually, this just shows our total operating costs because the printout was longer than my screen had room for. But I can actually look at what I'm projecting for a net return using that whole farm report. But you can see here then that labor total is $40,000 in this example. So what do we have next? All right. So again, in this whole farm report, and I can toggle between cash and economic, and I just wanted to show you this, that I've got the corn and soybean budgets combined. So I have a net return above total cost for both enterprises at $23.58 an acre, or $23,580 total. And if I looked at just on the cash side, though, it looks better, right? I don't have the depreciation. I don't have, my opportunity cost there. It looks better, but our net return on the cash side of things is $108.44 per acre, or 108,000. But again, keep in mind that economic principle, we may get along okay in covering cash, in the short run, but in the long run, we want to be able to cover all costs, and that's our economic report costs. Okay, so let's see. We've got some time. I think, Anastasia, let's hold that right there. I'm going to go ahead and share my screen, and I'll show you a little bit more about the ag budget calculator and how that works. Okay, so let's see if I can get this to work on my end. All right. So can you see? You should be able to see everyone now. Yeah, you can see this screen where now I'm actually in the ag budget calculator, agbudget.unl.edu. And I will be explaining more detail about how this works in an Ag Money Smart webinar this week at 6:30 on Wednesday evening. So you can sign up for that and hop online, and we'll go over some more things, some more details about what I'm projecting for the 2025 Nebraska crop budgets. And again, it's not just me. I work with a team of folks to do that. But I can actually then show you how you can really operate this ag budget calculator and do more with it. All right. So, but I just wanted to show you here that our managed crop, these are the two crops that that I had added in to show you how those things worked. Now, when we're doing labor, manage enterprises is the section that we're in, okay? But when we can actually add in labor. I'm going to go right here to this field operation. So when we're doing our crop budgets, we can actually go in and just add in all of the different things that we're doing in our field operations, all right? So we can, we're doing the work, right? So that work as a labor charge to it. So we can tell the program what we want to have for those labor charges, all right? So I can look here at this planting operation, and I'll just show you with, just hover over the pencil here, and we could go in and edit that. And when we put in an operation like this, we have our labor, and I've got the unpaid labor at a $40,000 salary, okay? I can do a lot of different things with that. I could say, well, pay me $30 an hour, okay? And how does that work out? Because all of these operations, again, based on our coverage rate, how long it takes us to get through the field, how long does it take us to plant and to do the work on 1,000 acres, all right? So everybody's going to be sort of in a different boat with that, all right? Because you're going to have some paid labor perhaps, and you're going to have some of your own labor. So we can vary this. This is not what I put in for our university labor. This year we were using $27 an hour, so, but we can change that factor, as we're doing these things. And I can show you, that and manage inputs. I can go here right to our labor area, and I've got all of these different folks in here, and here's the university labor for $27 an hour. Here's that unpaid labor. So I just put it in here and I said, okay, we're going to use that figure then in these budgets as we're figuring our cost of production, including a family living figure. All right. So I'm going to go back here and let's just look at the report. And this is kind of what we looked at on screen just a little bit, screenshots a little bit ago. I like to expand all the details, and this is where you can see, what I've actually put into that crop, all the pesticides, fertilizer, everything, okay? And I'm scrolling on down. It's kind of a long report, but here I'm getting $3.44 a bushel for my corn, and this is that 23-cent projected return after putting in, I think what did I put in here? I put in for revenue $3.60, but I also then rented our stocks for $20 an acre. So that added to the revenue in this case. Or I can toggle between that and cash. And so just covering cash costs would be $3.12 a bushel. So this program is it's really fun to work with. I'd love to teach and tell you more about it. But I also want to show you really quickly here that I've got those budgets in for soybeans and corn, but I'm going to go over here to the whole farm section. And this time now, I'm not going to include those two. Those were two extras that I added in. Okay. So I see here too, I had less acres on soybeans. Nope. I'm going to undo that. And I'm going to mark these two. These are the normal two, all right? Where I had 500 acres and 500 acres, all right? And then I'm going to go here and I'm going to say report. And here's that economic report with those added in that we just looked at on screen. And I'm going to scroll on down and find that labor figure right here. Here was that $40,000 where we're asking those two enterprise budgets to cover that figure, all right? And here's where we looked at with those combined, what we would have for a net on an economic basis, and then on a cash basis, what does that look like? And that was that figure. So I just wanted to show you that it's really pretty simple. The key thing in doing these budgets, again, you can drop down the university budgets and work from one of the lists that we have, or you can enter and create your own and then pull things together. And like I said, I really like this whole farm feature because then I can take a look and say, hey, what would be, my net profit with those two enterprises as I project ahead for 2025.
Hey,
Okay.
Glennis, there's a question about the calculator.
Okay.
How do you incorporate or include personal income when you have employment outside of the farm or ranch
Oh,
and don't necessarily pay yourself.
okay. So in the whole, let me just think about that just a moment. In the whole farm, so that's a good question. There is a place in the enterprises. You'd probably have to, I'm going to go here to this corn enterprise. So anything in red, I could just click on it and I could go here and I could do a revenue. I could edit the revenue right here and I could put in other income. So we, other enterprise revenue, you could then go ahead and add in your revenue if you wanted to, if that made sense to you and how you were looking at things. You could say, well, how much is that revenue total that I want to designate for this many acres? Again, this corn budget was 500 acres. The soybean budget was 500 acres. So you could go about it that way as well. All right. And I'm trying to think if there's another way to do that. That'd be one of those questions that I have to think about just a little bit and see how I would sort of fudge that figure in. But this program is designed to really look at cost of production on, so we're talking more on the cost side of things probably when you're looking at, enterprise budgeting. All right.
The other question was, in the calculator, is there a ranch calculation or beef feeder along with hay?
All right. So we are really close to launching our livestock budget program, a piece of it. And we will be able to then pull things together in a whole farm. So we have, if you have crops and you have livestock, you'll be able to use this. So more to come on that. I'm looking forward to be able to launch that piece of it. We've actually looked forward to it for a long time, but it's just been a slow process to do the very best we can in helping folks budget for livestock enterprises. And so it'll be part of the ag budget calculator, again, still to come, and hopefully very, very soon. I think, I know Shannon's been working with us and others. We have a team of folks working on it, but I think we're really close to the end game and getting that done. And so stay tuned to CAP and you'll see that. And as soon as those are out, then I'll start teaching how to use the program for livestock enterprise budgeting. And then hopefully at some point we have it so we can pull things together in the whole farm. There's some great features in this program. One is also a cash flow. And so again, there's just a lot of details when we switched over from crops to livestock in doing that. And then through this next year, we plan to have more in the ag budget calculator on specialty crops. So if you grow pumpkins, you grow vegetables, you grow flowers, figuring out those costs will also be enterprises. And then again, hopefully we can have it so that all of that can be merged together in the whole farm. So you can take a look at your projected net income for the coming year. So any other good questions like that? Thank you.
So I'd like to add something on the question about how do you incorporate personal income when you have employment outside of the farm or ranch. And I would like to hear Glennis and Anastasia's kind of point of view on this. I think it's important to know how much the farm or ranch is contributing to the family living expenses. I know for many of us who have off farm or ranch income, that's often used for that family living. So here we're really talking about when there's not enough off farm or ranch income, how are we incorporating that into the cost of production? So that can go several different ways. You might have another business, you might have another job, you might have all of these other pieces that are contributing to family living expenses. But I think the biggest thing to take away from today is knowing and understanding what your family living expenses are is critical, especially when you expect that farm or ranch to contribute to that family living expense. So any additional thoughts from Glennis or Anastasia on that comment?
Well, I think kind of what we've shown here is that if you look at that net, what do you need? Again, it is I was going to say this earlier. Whoops. My Zoom just kind of went out. Do you hear me?
Yep, we can hear you.
Oh, okay. Is keeping records. We talk a lot about, and as I showed there, the example of you know, how net worth, I don't know.
I think you're frozen, Glennis. Okay. I think we lost Glennis. Can you guys hear me?
Sorry about
Okay.
that. Yeah, my Zoom is acting up. So, but I'm just saying that keeping records not only on your farm side of things, but keep records in family living. Because then again, if like you said, Jessica, there could be a lot of scenarios where you might have another business. Can you budget some of that family living that comes from another business? I know many farms and ranches now have different LLCs, and you know, there's just a lot to keep track of. So doing the best you can with records, both on the farm side and the family side, can be so helpful with this whole thing. So
I also think it's important for farm and ranch families to have that separate bank account for those family living expenses. I think by having that separate bank account, either your off-farm income can go there, and then you can pay directly your family living expenses out of there. But it also knows if you are transferring, let's say $3,000 a month to make up from what you aren't getting on your off-farm job, you know how much that cost of living actually is. If you share one bank account, and I know many people do, and that works for them, but if you're struggling here, I do think it is important to have the farm account and have a family account so that you can easily keep track of where that money is going. I know farms, ranches, very intermingled. And a lot of times the farms and ranches don't really see that their business is a business, because it's a lifestyle. But it is still a business, and we need to know where the money is going so that it can be sustainable, especially if this is something that you want to live on and potentially pass on down the road. I do think it's important to keep track of that, which kind of leads me to the next slide here. Okay, so you find out that you need to adjust some things. I think it is important to know that both the farm and household have non-essential expenses that can be trimmed. On the farm side, it might mean postponing equipment, or reducing family expenses might be just not going out to eat as much. But a lot of times when farm and ranch families see that, hey, they're not making money, the family living is probably something that most people go to start adjusting, but it's probably one of the harder things to adjust. Um, During low prices, high input cost, we need to be thinking about farm as well as family living expenses. Maybe it's prioritizing your cash flow management. Maybe you time input purchases to spread out the cash flow more evenly. If this is something that you are looking at, make sure that you talk to your tax accountant, because it might throw off some tax things for you later down the road. But you could delay. You don't have to prepay everything in 1 year. Maybe you wait until you get that cash and then you buy it then. You might be losing out on some discounts, but you might extend out your cash flow a little bit better. If if meeting your family living expenses is challenging, maybe you look at diversifying your income. Maybe that's off farm work. Maybe it's agritourism. Maybe it is potentially some value added products or custom hire work. If you have the capacity, both mentally and the time to do that off-farm job or that custom hired work, those value-added products, those are good ways to incorporate some more income into your farm and ranch. It's a good buffer zone, especially if you have that time capacity in there to diversify that income. Now, how to reduce family living? Remember, those variable expenses are the easiest ones to adjust. Now, I want to say here, I have in here meal planning. I've hit that a lot. And it's expensive to eat out right now, but it's also expensive to go to Walmart and buy, or other grocery stores and buy food. It's just expensive. So maybe there's some energy savings that you can incorporate. Maybe there is negotiating down insurance, whether that's bundling or going to a different company. Those are all viable sources, especially in a farm too. Maybe you go to enterprise insurance units for your crop insurance. But I think the thing here is you have to be realistic. You can't be feeding your family on ramen noodles every single night to reduce that cost of living. You still have to have and maintain a good quality of life. Your needs still need to be met. And if you are facing those severe cuts or adjustments that need to be made, I think it is important to be realistic and seek maybe the off-farm income. Yeah, just be realistic. You can't be profitable just by cutting your family living expenses into nothing. So the benefits of budgeting your family living into your cost of production is you have a realistic net income assessment. It provides projected views of net income, and you can have a realistic goals and expectations for the future. It improves your long-term financial stability. You can prepare for those economic challenges. Right now, if you watch the webinar from last Thursday, Brad Lubin said that, we might be down a few years in the farm income. And by knowing where you stand right now can make you better suited to manage your debt responsible and maintain that operation in a few years. And it's a lot better decision making. You can make those informed decisions. Maybe maybe you're able to make that investment, maybe you're not. You can cut costs or diversify income. But when family farms and ranches are intertwined with family living, I think the big thing is we need to really be talking to our families about what the money is being spent on. And a lot of times I hear farm wives say, or ranch wives, frustrated that money's being spent on the farm and they want to spend it out the house. And so they go and buy stuff. I just think it's important to talk about these financials with everybody involved so that we can make these informed, smart decisions. And we will take some more questions here. I do want to point out that, Jessica and Shannon's on too, Glennis, myself, and then there's another Jim. We are spread out throughout the state in our ag profitability accountable regions. So if you have questions after this, feel free to reach out to us. I think we're all presenting this week, and we are here to help with whatever you need ag profitability wise. Are there any more questions?
So I think a fun question, and I'll let you all tackle this. And if you want me to hop in, I will too. What program do you like for record keeping?
My question is, what do you need it for? If you just need it basic income expenses, keeping track of that, I think a simple Excel can do wonders for you. If you have a lot of employees and you are paying into, their Social Security and all of that, you need that type of payroll assistance. Maybe QuickBooks is a way for you. If I know Jessica is a Quicken person, but I think it just kind of, what are your needs and what are you willing to pay?
Glennis, any addition to that?
They can all be, there's a lot of different options out there, and you can make whatever, you just kind of have to put your mind to it if you're trying to learn a new software program or whatever. They all take a little time, but once you get used to it, you're on your way. But I'm going to turn it back to Jessica because she's done a lot of work on the record keeping side of things. So what is your thoughts, Jessica?
So I would echo Anastasia. It depends on what you need, but also what you will actually do. One of the things I think most people think is that a software subscription is going to fix all of their record keeping woes. And the reality is that it's not. I have seen terrible records in every format, and I have seen beautiful records in every format, and that includes handwritten. I actually have one person in my area who brings in a handwritten ledger. that is immaculate that I would take 9 times out of 10 over a poorly kept software. So again, there are those options. The one thing I will say, Anastasia, about Excel that's hard for me is the reconciliation component of it. I think Excel can get difficult, especially if we have a more complex operation. And then if we've got lots of transactions, I'm pretty darn good at Excel, and actually building one that functions for an entire farm can be difficult. But again, it depends on what we're doing with that record keeping system. So the next question is, are there options for Excel spreadsheets out there already set up for agriculture? And the answer to that is yes. Many university extension systems do have sample balance sheets, cash flows, income statements that are out there. But again, can you get those all tied together and get the data out of it that you need? All right, I'm going to make one last call here. If you have a question, please go ahead and throw it in the chat or the Q&A. As we wait just a few minutes for those final ones, remember that free webinars continue through Friday of this week, and you can find a schedule and registration information for this schedule at cap.unl.edu/smartmoney. So with that, I don't see any additional questions coming in. Thank you for joining us today during an Ag Smart Money Week webinar. Have a great afternoon, and we look forward to seeing you tomorrow.